What if I told you that geopolitics and financial markets were more intertwined than ever before? A ripple in one often sends shockwaves through the other. The world is a complex place, and this week, we're focusing on the Middle East. Financial markets are on edge, anxiously awaiting the potential fallout from Iran's unprecedented strike on Israel. Will it trigger rounds of retaliation? Only time will tell. The past week has seen a decline in the stock market. The S&P 500 fell by 1.46%, while the Nasdaq fell by 0.5%. This retreat in stocks was primarily a reaction to the hotter-than-anticipated Consumer Price Index, or CPI, report. Traders responded to this data by scaling back their expectations of a Federal Reserve rate cut. Across the board, all tracked stock sectors experienced a downturn, with the financial, healthcare, and material sectors suffering the most significant losses. But let's not forget about interest rates. The CPI data prompted traders to reconsider their expectations for a Fed rate cut, effectively closing the door on a 25 basis point cut in June. The probabilities of a Fed rate cut have now been pushed out to September. Why is this happening? Well, inflation is higher than expected. The CPI rose 3.5% in March compared to last year, surpassing February's figures and analysts' predictions. Federal Reserve officials are treading carefully, hesitant to cut interest rates aggressively despite the rise in inflation. Their belief? It's still too early to change course. While a June rate cut is off the table, there's still a possibility for one in July or September, ahead of the U.S. election. This week, we'll also be listening closely to several Federal Reserve speakers as they react to the changing economic data. And let's not forget the slew of housing data set to be released. As for corporate America, investors will be greeted with more updates. Earnings from Bank of America, Goldman Sachs, and Morgan Stanley will round out earnings from big banks, while reports from United Airlines and Netflix will also be in the spotlight.
On this week's earnings watch list, we begin with Charles Schwab, scheduled to report earnings on Monday, April 15th. An interesting event to note is a significant purchase of over 4,000 contracts of the $70 put, recorded just a few days ago on Wednesday, April 10th. These contracts are lined up to expire by the end of the same week, specifically on Friday, April 19th. Further into Monday, we anticipate updates from Goldman Sachs Group. In an intriguing turn of events, we observed a considerable buying of more than 2,000 contracts of the $425 call on Friday, April 12th. These are also set to expire on Friday, April 19th. As Tuesday, April 16th unravels, Bank of America steps into the limelight. Early on in the month, precisely on Tuesday, April 2nd, a significant buying activity involving over 36,000 contracts of the $37 call caught our eye. The expiry of these contracts plotted for the long term, specifically on Friday, August 16th. We still stay with Tuesday as United Health Group is also confirmed to release its earnings. On Friday, April 12th, a transaction worth mentioning took place. The purchase of over 5,000 contracts of the $425 put. The expiration date for these contracts is set for Friday, April 19th. Let's hold on. Later on Tuesday, we'll highlight Johnson & Johnson. The narrative here revolves around the acquisition of over 5,000 contracts of the $170 call, which transpired on Friday, April 5th. The expiry of these contracts is set to be later in the year, specifically on Friday, September 20th. Rounding off Tuesday's earnings reports is United Airlines. In late March, on Monday, March 25th, a significant purchase of almost 18,000 contracts of the $55 call was observed. These contracts expire on Friday, September 20th. On Wednesday, April 17th, ASML will report its earnings. Early in April, on Monday, April 1st, there was a notable purchase of over 1,000 contracts of the $1,100 call, set to expire on Friday, June 21st. Taiwan Semiconductor Manufacturing Company Limited will be stepping up to the plate on Thursday, April 18th. Earlier this month, on Monday, April 8th, there was a significant purchase of over 22,000 contracts of the $35 put, with a long-term expiration set for Friday, January 17th, 2025. Also on Thursday, Netflix is confirmed to report earnings. There was some notable buying of over 2,000 contracts of the $770 call on Friday, April 12th, set to expire on Friday, June 21st. Finally, to wrap up the week, American Express is confirmed to report earnings on Friday, April 19th. Early in April, on Wednesday, April 3rd, there was a significant purchase of over 4,000 contracts of the $170 call, set to expire on the very same day. So, as we look ahead to a busy week, we'll be keeping a close eye on these key players and the notable contract activities surrounding them. Remember, these insights can often provide a glimpse into what the market might be expecting from these earnings reports. A fascinating week awaits us.
In the midst of all this, let's not forget about the cryptocurrency market, particularly Bitcoin futures. Is the halving priced into the market already? It might seem so, but we think otherwise. Prior to the geopolitical tensions, the market had anticipated Bitcoin to hover around the 70K mark per BTC around the halving. However, the global situation has knocked it down to around 64K. We are now just days away from Bitcoin's fourth halving. If the past is any indication, post-halving growth trajectories could take BTC anywhere between 140K and an astonishing $4.5 million per coin. Yes, you heard that right. This halving will also shift the miners' revenue sources. Currently, miner revenue consists of the block reward, which is set to drop 50% from 6.25 to 3.125 BTC, and transaction fees paid by users. Historically, a minority of miner revenue has been derived from fees. With the halving, the block reward-derived revenue will decrease, making fee-based revenue even more crucial. So as we navigate this week's economic landscape, keep a keen eye on Bitcoin futures as the halving approaches. Get ready, folks. It's going to be a wild ride. As we're keeping an eye on the Bitcoin halving and its potential impact on the crypto market, let's also take a look at the economic calendar for the upcoming week.
Welcome to a week of economic events, each carrying its own weight of influence on the world's economies. Starting off the week, Monday is packed with a slew of influential economic indicators. The Empire State Manufacturing Index and retail sales data set the tone for the market, while business inventories and the NAHB Housing Market Index offer insights into the health of the retail sector and the housing market, respectively. Retail inventories and the NOPA Crush report provide further depth to the retail sector's performance. To cap off the day, Mary Daly will offer her insights, potentially moving the market with her words. As we move on to Tuesday, the focus shifts to the housing market and industrial sector with the release of building permits, housing starts and permits, and industrial production data. The day concludes with Jerome Powell.
I say Jerome! I say Jerome!
The man at the helm of the Federal Reserve, offering his perspective. Midweek Wednesday brings the MBA mortgage applications, the EIA Petroleum status report, and the Beige book, painting a picture of the housing market, energy sector, and overall economic conditions, respectively. Treasury International Capital data arrives as well, alongside a speech by Loretta Mester, whose words often carry weight in the market. Thursday's economic calendar features jobless claims, the Philly Fed Manufacturing Index, and existing home sales data, providing insights into the labor market, manufacturing sector, and housing market, respectively. The day also sees speeches by John Williams and Raphael Bostic, while the EIA natural gas report and the Fed balance sheet provide further fuel for the market's movements. Finally, Friday offers a lighter schedule with a speech by Austin Goolsbee and the Baker Hughes Rig Count, wrapping up a week filled with a variety of economic indicators and influential speeches. In essence, each day of the week brings its own set of economic events that have the potential to shape the financial landscape. From manufacturing and retail data to housing market indicators and speeches by influential figures, these events collectively form a mosaic that paints a picture of the health of the global economy. Market participants will be watching closely, ready to react to any unexpected changes. So as we journey through the week, remember that each piece of data, each report, and each speech can be the catalyst for the next big market move.
In summary, this week is teeming with potential market movers. From the geopolitical situation in the Middle East to the Federal Reserve Speaker's reactions to the changing economic data and the release of more corporate earnings, there's a lot to watch out for. So keep a keen eye on these events as they unfold, and remember, the world of finance waits for no one.